All right, everybody, welcome to our Talking Real Estate with Champions Real Estate team at Berkshire Hathaway Home Services Ambassador Real Estate Company. So every Wednesday we get together around lunchtime and kind of let you know what's gone on in the real estate market over the last week. So my name is Mark Wayne II with Champions Real Estate team. We have Rich Howdle, who's also with Champions Real Estate team. And then we have Russ Williams with Arbor Bank joining us, kind of giving us the mortgage update on what's going on in the mortgage industry. And kind of what you can expect going forward and all that kind of fun stuff. So anyways, we'll jump right into it. I'll share the graphic that we have as far as what's going on in the market here. So what we saw basically from this week, we had about 482 new listings go active on the market. We had 385 new contracts written, basically homes that went pending. And then we had 590 homes sold. So what do those numbers mean to us? Basically over the last week, we are up new listings, and overall we are up about 100 or so listings, active listings on the multiple listing service. So we are at about 2250, so 2,250 listings active on the market right now. So breaking that down even smaller, we are at about 1,450 existing homes on the market and about, just a shade under 800 new construction listings. That's including models, spec homes, and those that are being under construction as well. So what we're seeing in the marketplace, we're still almost a historic low for inventory as far as homes for sale in the Omaha marketplace. This is kind of Omaha, Lincoln, everything. So Omaha and Lincoln multiple listing services merged last year. So we kind of get a big picture of what's going on in the overall marketplace here. Not just the Omaha metro area. So it kind of includes everything going through there. Let me pull up the trend graphics report here. So trend graphics kind of taking a look at kind of a bigger picture, month to month, year to date, all that kind of fun stuff. So we're down, like I said, in listings about 40% from what we were last year. So that's our biggest, Achilles heel is just having that number of listings that we can have out there to sell. Mortgage rates are still very low at the historic rates. So we'll touch base with Russ here in a second about the mortgage rates. But what we're seeing is that, and I've had clients that are looking in the new construction side of it, with not having very many options in the existing marketplace, but those prices, I think Russ actually shared the article I read this week that basically lumber is up about 80% from April, just with the supply chains and everything of that sort, they kind of with the COVID-19 coming in, and then you have supply and demand. Also, we're seeing, just appliances, refrigerators. We talked about that yesterday at our sales meeting. Some delays basically getting homes closed because they can't get the refrigerators in or the ovens and things of that sort. I know myself, I've ordered a chest freezer because we bought a side of beef, and we're going to have a side of beef being done in the next month or so, and we're not getting our freezer until I think October. So one of those things that we just got to deal with, across the board, not just in the real estate industry going forward. But that's one of those things, if you're thinking about the new construction side of it, those are some things that plan ahead. And it ain't, I was always told that growing up as a fourth generation realtor, the cheapest time or the best time to buy new construction was yesterday, with labor costs, as we're seeing material costs, land costs going up. So that's one of those things. If you're thinking about new construction, now is the time, especially with the historic rates being so low, getting into something that you can be in for a long time in that regards of it. If you're finding things in the new construction or in the existing homes that aren't there for you. So also taking a look at that kind of side of it is just if you're buying an existing home, and turning around to flip it, those cost of materials are going up. So your margins might not be there if you're trying to turn around and resell that home that you just bought. So those are all things to take a look at, when you're entering the real estate market, whether you're flipping it, whether you're new construction or existing, those are all things here at Champions Real Estate Team that we're here to coach you and give you your options and see what is the best option for you. Is building a new construction house, is doing the existing marketplace. And if you're looking at it, you're kind of don't want to put your house on the market because you can't find a house, there's ways that we can kind of put that in the contract that it's your home, the sale of your home is contingent upon you finding a new house within so many days, whether that's 30 days, because those buyers that are out there, if they truly, really want your house, they'll wait. They'll wait for you to find a house because they know they have a house, they're going to move into maybe, 30 days, 60 days, 90 days, just depending on they're willing to wait that aspect of it through there. So if that's a concern of you, reach out to one of us here at Champions Real Estate Team, Rich, myself, Jeff, Janine, Thor, Annie, and Jeff as well. So, but we're here to help you through that aspect of it. So let's touch base here with Russ, kind of what's going on in the mortgage industry. I just keep reading that the rates are at historic lows, and all that good stuff. So I'll let him kind of cover that aspect.
Yeah, mortgage rates are still just hovering just off of all-time lows. We are up about 1/8% from what we were week over week last week. Every week, the Federal Home Loan Mortgage Corporation, also called Freddie Mac, releases what's called their primary mortgage market survey, and rates for 30-year fixed rate money paying just a little bit of points are still below 3%, but that's up just a little bit from the week before. So rates are continuing to stay very low. NYFA still got a lot of money for first-time home buyers out there. Many of your grant programs have already exhausted their funds for the year, but NYFA is still lending for folks that are maybe a little bit down payment limited, that are first-time home buyers. We're also seeing, just as Mark had mentioned, tremendous growth in new construction. Builder confidence is at the highest levels we've had since 1988, and new construction is booming right now. At the same time that we're seeing materials cost rise, as Mark had mentioned, because of those breakdowns in supply chains and materials factories running on partial staff because of social distancing, et cetera. So mortgage rates are holding very steady, and we expect they'll probably be here for a while. Before we started, Mark had mentioned that we're starting to see some softening of lenders that are taking loans for lower credit scores, maybe than they were earlier in the COVID environment, pre-COVID, if you will. So if you have credit scores in the 620 range, give these guys a call. They'll be happy to get you connected to lenders that might be able to help you out. So anything else you want me to add there, Mark? We are seeing purchase applications rising as well, which is a factor of two things. One is refinances have slowed just a little bit at the same time that the purchases are still booming, which means if you want to buy a house, you need to get in there now and go in highest and best.
Yeah. And then I think one of the articles you shared this week as well was the refis, is that they're going to become more expensive now. That was Freddie and Fannie basically added a 0.5% fee, essentially trying to protect themselves for people that are refining, pulling money out of their house or dropping that interest rate to save money because of the uncertainty of the COVID aspect of it, of job security and stuff like that. So the government, so Freddie and Fannie are kind of trying to protect themselves, for any forbearances or delinquencies or anything like that. So I don't know if there's anything else on that you want to share that you've read on.
Yeah, I've had a number of folks shoot me messages, text, emails, calls about that are locked right now. And Russ, does that mean we're going to have to pay 0.5% more in either rate or fees? And the answer is no. If you've already gotten your interest rate protected, as long as you don't change the terms of your financing, your lender should honor that rate and the costs that were quoted to you. But for new locks or for any transactions that you change the terms on, you could be subject to a little bit more expense at the time of closing or a slightly higher interest rate. So I know that there has been a lot of pushback, not only from the National Association of Realtors, but also from the Mortgage Bankers Association on the way that this whole fee was implemented. So we don't know whether this will stick long term, but at least for the time being, for new locks on refinances that are conventional finance, and that's going to be things like Fannie Mae, Freddie Mac, you're subject to a little bit more expensive cost when it comes to refinancing.
Yeah, I think I read it's about $500 per 100,000 that you're loaning on, roughly. So you
that's
got
correct.
$1,000 mortgage, that you're refining, and it's another $1,000. Which, if you take your savings, if you got $100 savings a month, and that's basically 10 more months that you got to be in it to break even. That's a lot of conversations I have with my clients. I had one recently. They're talking about refining. And it's one of those that it's like, what is the break even point for you? How long are you going to be into it? And what makes sense to you? And then some of them are like, well, I might keep it as a rental. Well, that's obviously going to lower your payment and increase your cash flow, your passive income. So if someone else is paying it, then maybe that works for you. So there's a lot of different variables that go into that, when you are talking about refining, obviously even with a new purchase that, somebody like Russ at Arbor Bank can really help you out with going forward in there. So. But yeah, so anything else you got to add as far as from the mortgage industry side?
Well, the real estate market is very active. As we've talked about in previous sessions, generally speaking, housing is the number one driver of our economic growth in the United States. And at any given point in time, the mortgage world should be able to handle about $2.5 trillion worth of volume as far as processing new loans. And right now the industry is sitting at about $10 trillion in applications that are in process. So they're running about 4 times capacity right now. So turn times are running a little bit longer. That also means appraisers are taking more time. We're seeing appraisals, depending upon the market, take anywhere from 2 or 3 weeks all the way up to a couple of months. So as you're looking to buy a house, keep that in mind, that you might need a little bit of extra time built in there to make sure that all the different vendors that are needed to process your purchase are able to get the job done in time for you.
Yeah. Yeah. So real estate, like we said, real estate market is strong. I just sent out my newsletter to my sphere today, and that was one of the things. Rates are crazy low, and the other thing when you're selling the house is that, it is a seller's market, but buyers are very educated and they've written a couple offers on houses. So they know what 150 gets them. They know what 200 gets them, 300, and so on, what they've written those offers for. And some sellers are like, well, I'm just going to throw it on the market. I'm going to get top dollar. Well, they'll walk in and say, well, my house is listed at 350. And they've seen all the houses at 350. They've written offers on houses at 350, and they won't even make an offer on your house if you haven't done the necessary things to make it worth that 350. So I think that's one of those things that when you're selling a house in a seller's market, you still have to put that time, effort in, making sure it's clean. And that's stuff that we do here at Champions. We hire cleaners to come in for you, stagers, photographers, all that kind of fun stuff to maximize that dollar amount for you. So I think those are things that you really need to take into account, even though it is a seller's market. You can't just put a sign in the yard. I see that happen, that you walk through houses and you're like, yeah, if this thing was, updated or even just generally cleaned and organized a little better, you may attract more buyers and more competition for you. So that's one thing that's what we're here to help you do, because that's one of the things, like, well, I can just put a sign in the yard, and some agents may do that, but that's one of those things that we do here, is just to differentiate ourselves and offer that full value service. So touch base with that. So yeah, you can check out our website. I'll pull it up here. Where to go here? So championsrealestateteam.com. You can search any of the active listings in the Omaha Metro Lincoln area, basically the surrounding areas. You can jump on here and get our home buyer guide and our home seller's guide, kind of just figuring out what you need to do, the steps going through that. And I think the very first step is ultimately give one of us a holler. We'll touch base and get you in touch with the lender, be it at the bank you're with, or, give Russ Williams a call at Arbor Bank, just know your options. I think we did that renting versus buying seminar. You can jump on and check that video out. Got that on my YouTube page, as well as it's on our Champions Facebook page. But as always, we're here to help. And if you've been watching these videos and you have any specific questions, reach out to us, shoot us a message. We'll just do it as a topic. We'll make a video about it, or we can talk to you individually. We're here to help through that process. So once again, we appreciate you guys joining us here at our Talking Real Estate segment every Wednesday at noon with Champions Real Estate Team here at Berkshire Hathaway Home Services Ambassador Real Estate Company. It's a mouthful, right? So, but we're always here to help you. Give us a holler. So Rich, thank you for joining us as a member of the team. And then Russ Williams with Arbor Bank. And as always, have a great week. And looks like it's supposed to be a nice weekend ahead. So got over that big windstorm we had last week. So take care, and we'll talk to you soon.